All right, everyone, here we are with ticker symbol WWR, Westwater Resources Inc. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And let's jump into this chart. So Westwater Resources Inc. has been in a bearish run after having a great bullish one, right? It actually went up from about $1 and some change all the way to these highs of about close to $15. There was a rejection, and since the point of October 7th that it fell below the 50-day moving average, it's been falling to newer lows, and it broke through the 50-day moving average only once in the last week, and that was way back on the 15th. Now, we've been in a bearish run, and it hit new lows today, but from those lows, it actually has bounced back up, and it's currently at 422, creating some momentum here. Could the bulls continue with this momentum? That's what we're going to see here as we go ahead and break this chart down, and we're going to look at the 50-day moving average and our new resistance level. So these numbers are very important for tomorrow. So the 50-day moving average is 458. As long as we're below it, the bears are in control. The moment we cross it, the bulls are in control. For the bulls to continue this momentum, they have to break through this resistance level, and that is 441. If the bulls can break through 441, turn that into a support and start to break away from it, hitting newer highs and getting over the 50-day moving average and back into bullish territory, they're on their way to building momentum and creating a catalyst to have a rally. But the bulls need to first break through before even getting to the 50-day moving average of 458. And anywhere in bullish territory, they need to break through 441, turn that into a support, and break away from it. This does not signify that the bulls are getting control. They don't have control over the chart until they break away from 458. Now, crossing it gets us back into bullish territory, but now the bulls need to maintain themselves, pulling further away from it in an upward direction. But the first step to get there is breaking through resistance, which is 441. Now, the lowest point in this whole entire bearish run that we've seen in the last couple of days and weeks actually, because it actually started on the 7th and we're on the 21st, it's been 2 weeks, is way down here at 395. That's the lowest point that Westwater Resources Inc. has reached, and it's super important to keep in mind that there's been a turnaround here with some momentum. So the question, like I said, is could the bulls maintain it? Well, they need to break through that resistance and pull away and get back into bullish territory to do so. Now, if this was to change in direction, then the bears are already dominating this because we're below the 50-day moving average, and their goal is to cross through the support of 395. By breaking through 395, they're pulling further away from the 50-day moving average in a downward direction. So it's so important to keep in mind that if 395 is broken through, I want to emphasize to all investors, pay very close attention to how quickly this is hitting newer lows. Is it hanging out around there, giving a chance for the bulls to reappear and bring this back up? Or is it tearing down further away from the 50-day moving average fairly quickly and pulling away from that support level to newer support levels and newer lows? I hope that with these cues, you guys are well equipped and prepared for tomorrow's trading day. And as always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for. to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, And thank you guys so much for watching, and let's make some money.